You're welcome to today's lesson. In today's lesson, we are going to look at one very important topic in accounting. It's called control account. Control account. As a student preparing for any exam on accounting, whether you are preparing for senior certificates, West African examination, or you are preparing for JAM, or you're preparing for any exam at all on accounting, the topic we are going to be looking at in today's lesson is going to be of great benefit, because you can't write any accounting exam and come out without a test on this particular topic of discussion today. But before then, let's quickly look at lesson objective. Lesson objectives are more like the guide, things that are going to guide our journey into the lesson of today. Number one, we are going to define what control account is. If you are asked, what is control account? How do you intend to define, or how is control account defined? We'll look at some of the advantages of control account, and then we identify the division of control account, how control accounts are divided, and then we explain the concept of contra entry, and then we are going to solve related problems from the exam guide. Now let's quickly look at the definition of what control account is. Like I mentioned earlier, this is one of the very important topic in accounting. You can't write any exam, whether internal exams or external exams on accounting, and you won't come across at least one or two questions on control account. So if you are asked, what is control account? Now, control account can be defined in different ways, but for the sake of this lesson, we are going to look at it in just three perspectives. Number one, control account is going to be seen as a memorandum account. It is seen as a memorandum account, the balance of which reflect the aggregate balances of many related subsidiary accounts which are part of the double entry system. Now, I'm going to pick out a few things from this definition. Number one, memorandum account. When we say an account is a memorandum account, we are talking about an account that summarizes, an account that tries to house different accounts together. So it is memorandum account because it has a whole lot of accounts that are linked up in this single account. And the balance, they said, and I also said the balance of which reflect the aggregate balances of many related subsidiary accounts. Let's pick out subsidiary accounts. Subsidiary accounts are basically the what we call the account of prime entries. We call them the principal books of account. Account where transactions are recorded before they are posted to the ledger. We have basically 5 subsidiary books. We have the cash book, we have the sales day book, we have the purchase day book, we have the return inwards, and then we have the return outwards. So the control account try to bring all these accounts together in one single account. Number two, it is the account to which is debited and credited the total amount of all the transactions which have been debited and credited in details to the individual debtors and creditors account. I want to just explain the concept of debtors and creditors before I now tell us how these balances are put together to make up a control account. Who is a debtor to a business? A debtor to a business is somebody that is owing the business. Somebody who comes to the business to buy on credit. The person is a debtor. Or somebody who comes to the business to buy without giving out something of value. It may be that the business may not even be, they are not really selling something tangible. It may just be an organization that deal on services. Anybody that benefits from the services rendered by the organization without making payment or without an exchange of something of value, such a person is a debtor. And then, who is a creditor? A creditor is a person that the business is owing. the person that the business is owing. Every business must have one or two persons that are owing the business, and at the same time, the business can also find itself owing the outsiders. So if the business somehow goes to the market to get item, get product, or get goods without making payment or without exchanging something of value, at that point, the business become the person you are actually going to buy the things from become a creditor to the business, because you are buying from somebody, you are not paying to the person. So that person is a creditor to the business. You can either call them creditors or you call them suppliers. So the people that can give out item to you without collecting money from you becomes your creditors. While the people that come to buy from you without making payment are called your debtors. So in control account, we say that it is the account to which is debited and credited the total amount of all transactions which have been debited and credited in details to the individual debtors and creditors ledgers. The question is, if somebody comes to the shop with cash to buy an item, what will make you to write the name of the person somewhere? Somebody comes to the shop, let me assume you are dealing on cartons of Indomie, and maybe a customer comes to the shop with maybe 50,000 to buy 5 cartons. Would there be any need to actually write the name? Let's assume Mr. John come to the business to buy 5 packets, 5 cartons of Indomie. Would there be any need for you to waste your time and say, I want to write Mr. John? Mr. John bought. No, there will not be any need. What will just happen is that as long as that transaction is carried out on cash, that transaction may just reflect in the cash book as sales. So once the cash book is open, you just write sales and then you write the amount of money that is involved. There will be no need for you to write the name of the individual, because as long as that individual has made payment for that transaction, the transaction ends at that point. But if the buyer or this Mr. John comes to the business to buy without payments, assuming the Mr. John now comes to buy these 5 cartons of Indomie without bringing money, at that point there will be need for you to write, because it's possible that tomorrow Mr. Peter may want to come and buy on credit too. So if you don't write the name of Mr. John who comes to buy on credit today, by the time Mr. Peter comes tomorrow to buy, you won't be able to differentiate the transaction between Mr. John and Mr. Peter. So it is now very, very important to open a book where the name of individuals who comes to buy these items will be recorded. Meanwhile, these transactions will be opened in the individual's account. So the account that you open in the name of the individuals is what we are referring to here. We said that it is the account to which is debited and credited the total amount of all the transactions which have been debited and credited in details to the individual debtors and creditors ledger. So you open an account in the name of John, and then you know that John comes to the business to buy 5 cartons of Indomie on credit. And then somehow, you as a seller, you have gone to the market to buy, let me assume you went to the market to buy 200 cartons of Indomie. You know you went to the market maybe to buy it from Peterson. At that point, the name of the Peterson will also be captured, because you need to know what transpired between you and Peterson. So the account that is open in these individuals must be opened in their names. So the control account is an account that will now show you in a very clear way how much is bought from individuals and how much is actually given out to individuals on credit. And why the control account will take care of this various individual. In the individual account, these transactions are debited and credited respectively. And the third way we can actually look at control account is that they are kept for customers. In brackets, you see sales ledgers or trade receivable account, and then suppliers, purchase ledgers or trade payable account. Now, I also want to mention that whenever we are talking about control account, we are talking about sales ledger or trade receivable account. And whenever we are talking about and also creditors, whenever we are talking about control account, we are talking about the account of debtors and creditors. And then for the debtors control account, you can also call it sales ledger or trade receivable account. And for the creditors control account, you can call it purchase ledgers or trade payable account. All right, let's look at some of the advantages or benefit or merits of control account. If I am keeping an account that I call control account, what are those things that I stand to benefit? Are there benefits to this control account? Are there things that I am going to benefit, or I am just going to keep this account without any tangible benefit? I have some benefits that one can actually enjoy if control account is open in a business. Number one, control account helps in locating errors. Whenever you open control account, errors can be located. What do I mean? Now, in a business that is operating, assuming from January to December, and you have a whole lot of persons who are coming to buy on credit and persons you are going to buy on credit from, or possibly a lot of customers who are coming to buy with cash. If you don't have a particular account where all the debtors, the people that are coming to buy on credit, are grouped together, it will be very, very difficult to actually know whether you are making mistake or not. So one of the things that one can benefit from control account is that it will help you to locate areas of errors. By the time you begin to account for who buy what and did not buy what, you'll be able to know areas where you have made mistake. So in control account will actually help you to know areas that the record were not straight. Number two, fraud will become difficult. When you have open control account, fraudulent practices will be drastically reduced. How? A lot of persons can actually buy on credit and they can deny. We are in a society where when people are in their needs, they come to you with, as if they want to die. And then with that kind of, some persons will be so emotional about it that if you don't even give it out, it's as if you are wicked. So because of this, sometimes when these people come, you give out these things on credit to them. And before some persons will even deny. Maybe 2 months, 3 months, 4 months, 5 months, 6 months has passed and this person has not returned the money, or the person has not paid you back. And somehow you want to go and find out from the person might tell you, please, it's not me. There may be some level of denial. So to avoid things like this, there is need for you to now prepare a control account where these persons can be identified and notified as at when due. So when this kind of account is prepared, it will be very difficult for you to have this experience. And then too, some persons can maybe the sales girl or the sales agent might even manipulate the records. They can even omit some transactions for personal reasons. 4 persons can buy on credit and he can decide to record 3 if there is no control account. He can decide to record 3 and then go behind closed doors to check on the 4th person and take the money from the 4th person as for personal reasons. So, but when control account is there, control account is going to give you an X-ray of the number of persons that actually bought on credit, or the number of persons that are debtors to the company. So because of this, fraud will become difficult. The third benefit is that the balances of the total debtors and creditors can be easily calculated. with this, you'll be able to know that this is the amount of money that our customers are owing us, and this is the amount of money we are owing our suppliers. Control account can afford you that opportunity to know the number of persons that are owing you and the number of persons you are owing. Without control account, you won't be able to identify the number of persons you are owing and the number of persons that are owing you. So the balances of the total debtors and creditors can be easily calculated. They can be used to detect missing figures like purchase and sales. Now, there is an account that is called an incomplete record, or is a record that is called an incomplete record. Now, when an account does not go through the dual aspect of accounting, the dual aspect concept of accounting, such an account is called single entry. Now, sometimes what can give birth to single entry is what we call incomplete record. Sometimes people who are not who does not have accounting background may want to dive into accounting practice. Probably they own a business and they want to prepare account. So in course of trying to prepare the account, they may not understand or they may not apply the dual aspect concept of accounting, thereby, preparing an account that does not observe the debiting and the crediting, principles of account. Now, at that point, everything is going to be muzzled into an account. When this is done, it is called single entry. Meanwhile, you can still have record prepared by these same persons that may omit certain fundamental transactions. Example, you can have a list of transactions and you may not be giving purchase. The person who prepares the record may have forgotten to include purchase or may have forgotten to include sales. But with control account, you'll be able to detect those missing figures, even if they are not provided. So control account is actually very, very relevant because with control account, even if purchases are omitted from the record, sales are omitted from the record, with control account, you'll be able to detect them. And then the last but not the least is that it also saves time. Control account saves time. The time involved in trying to flip through your subsidiary books to know who is owing you, who you are owing, how much you have received from the debtors, how much you have paid to your creditors. The time that is involved can actually be saved when control account is prepared, because before you have that time to go through all the subsidiary record, you must have extracted the people you are owing and the people that are owing you, and then group them under an account called the control account. By the time you do that, the time that you will have spent trying to identify people who are owing you and people who you are owing from the subsidiary book will be saved just by the time you just go through the control account. So to give it a summary, I said number one, control account helps in locating errors. Number two, fraud will become difficult. Number three, the balances of the total debtors and creditors can be easily calculated. Number four, they can be used to detect missing figures like purchase and sales. And number five, they save time. There are more than this. We have too many advantages to this control account, but for the sake of the lesson, we have reduced it to just 5. Now let's quickly look at how control account is divided. We call it the division of control account. Control account is divided into total debtors control account, or what we call sales ledger control account, and total creditors control account, or what we call purchase ledger control account. Let me explain this briefly before we move further. Now, when I say that control account is divided into debtors control account and creditors control account, what I'm trying to say is that the control account as an account is just basically on two different types of transaction. Number one, the type of transaction where customers come to the business to buy on credit without making payment. And number two, when the business goes to the market to buy on credit. So these are the only two scenarios where control account can actually come in. So when we prepare control account, when you open your control account, you have just two components to it, or two divisions to it. One houses all the debtors, all the people that has actually come to the business to buy on credit without making payment, while the second one takes care of the people you have gone to buy from without making payment. And I also want to give us variety of names, because certain tests will tell you different names about this particular account. Now, for total debtors control account, you can also call it sales ledger control account, or you call it trade receivable account, or you call it account receivable. Let me take that again. Total debtors control account can also be called sales ledger control account, trade receivable account, or account receivable. And then for total creditors control account, you can call it purchase ledger control account, trade payable account, or account payable. So however the author of any accounting related textbook decide to call it, whether it is total debtors control account, sales ledger control account, trade receivable account, account receivable, students shouldn't be confused. All of them are referring to one particular thing. And then whether the author decide to call it total creditors control account, purchase ledger control account, trade payable account, or account payable, all of them mean the same thing. They are creditors control account. Let's look at another very sensitive part of control account that students find it very difficult to understand. It is called the contra entries. This is very, very interesting, because I said earlier that as long as customers are coming to the business to buy on credit, there are times when you can also go to the market to buy on credit. The business can decide to buy on credit too, especially when they don't have enough resources to pay for the item. They can also buy on credit. And so when customers come to buy on credit and the business goes to buy on credit, there must be a link. There must be the accounting as a profession has tried to establish a link between the debtor, that is the customer that is coming to buy on credit, and the supplier that the business is going to buy on credit from. So the concept of contra entry is going to explain this link in such a way that students will be able to appreciate. Now let's look at it. I said contra entries occurs when a supplier is also a customer. The firm can sell on credit to a customer and buy on credit from the same person. The indebtedness will set up against itself. Hence, at the end of the month, the smaller of the two balances will be set off against the larger balances. I want to tell you for free that this is one of the areas where students usually find it very difficult to understand. But if you pay undivided attention to the explanation I'm going to give now, you are going to see that this is one of the simplest part of, or the easiest part of control account to understand. Let's remember the fact that we can have debtors, people that are owing us. And let's also remember the fact that we can also buy from suppliers. So once we buy from our customers on credit, that person automatically becomes our creditor, and the person that buys from us on credit becomes our debtors. Now, if for instance, somebody who is dealing on cement decide to come, let's assume we are manufacturers of cement. We manufacture bags of cement. And then Peterson is just a retailer of cement. He comes to the warehouse to buy cement on credit. Now, Peterson comes to the warehouse to buy 200 bags of cement on credit from us. And then as Peterson comes to buy 200 bags, let's assume that one bag is about 100,000, about 2 million. Now, Peterson is owing us, the business, 2 million. And then somehow, we ran out of stock. And urgently, we need like 20 bags. Urgently need 20 bags of cement. Maybe we have a customer somewhere that urgently ordered 20 bags, and we don't want to fail that particular customer. And we know that Peterson may still have some bags of cement in stock. So what are we going to do? We will not lose this customer who has so much trust in us, because business is all about trust. So this customer just wants to get 20 bags, and we know that we can get this 20 bags from Peterson. What are we going to do? Let's assume we don't have the money. We are still in the process of trying to produce bags of cement, but right now we don't have that number in stock. What do? We quickly go to Mr. Peterson and say, please, Mr. Peterson, we need 20 bags of cement. At that point, we are going to collect that 20 bags of cement on credit. Meanwhile, Mr. Peterson is already owing us 1 million, which is about 100 bags. So now, that 20 bags is about 200,000, because one bag is 100,000. Remember, we are not going to buy it from Peterson at the rate we are selling to Mr. Peterson. No. We are going to buy it from Mr. Peterson at the rate Mr. Peterson is selling to his own customers. So we are buying that 100 bags we are buying that 20 bags at 100,000. Probably when we gave out the 200 bags to Peterson, we sold it 50,000. But at this point, we cannot go to Mr. Peterson and expect Mr. Peterson to sell it back to us for 50,000. Mr. Peterson must have to make gain. So at this point, Mr. Peterson is giving us 20 bags at 100,000, at the rate of 100,000 per bag. That's about 200. So that 200 is what we are owing Mr. Peterson. Meanwhile, Mr. Peterson is owing us 1 million. So what I'm trying to explain is that indebtedness, that link that connects Mr. Peterson and the business is what we call contra entry. So what we do, it will not be wise for us to say, okay, Mr. Peterson, pay us 1 million and we will pay you 200,000. In business, for me, it is a waste of time. So what we do at that point is that we have to write what we call set off. We have to write what we call set off. So our 200,000 will be set off against the 1 million of Mr. Peterson. So by extension, whenever Mr. Peterson wants to pay us our money, Mr. Peterson is going to pay us, any amount he's going to pay us, he's going to subtract 200,000 from that amount. That's how it's going to be. So that's the concept of contra entry. The concept of contra entry is when your debtor becomes your creditor. Your debtor is also your creditor, and your creditor is also your debtor. That's the concept of contra entry. So by the time you look at the account, you either see some text, we call it set off, or some we call it contra entry, and they are basically on the opposite side of the account. On the debtor's control account, your set off is always on the credit side, because it will always reduce what your debtors are owing you. And on the creditor's account, it will always be on the debit side. Let me take that again. Your set off will always be on the credit side of your debtor's account, while it will be on the debit side of the creditor's account. Why will it be on the credit side of the debtor's account? It will be there because every transaction that is on the credit side of the debtor's control account reduces whatever your debtors are owing you, and every transaction that is on the debit side of the creditor's control account reduces what you are owing your creditors. So that is how far we can actually explain the concept of contra entry. Having said all of this about the control account, we are quickly going to check our exam guide. So once you have been able to choose your topics of interest, you just go straight to get started. Once you click on get started, all the questions under all the years will now pop up. Now look at this, number 1. They said, which of the following is a contra entry? Remember, we have explained the concept of contra entry under control account. But I want to mention something, that in the whole of accounting, for under this particular scope, at the secondary school level, we have just 2 forms of contra entry. Number 1, the one that you can see under control account. Number 2, the one you can see under cash book. So if the examiner sometimes may want to, try to check if you really understand the concept of contra entry. Like this question now, which of the following is a contra entry? A, treatment of discount received in a cash book, which is not true. Lodgement of checks into the bank. Withdrawal of cash for private use. Lodgement of cash in hand into the bank. Now, the contra entry in the cash book, we have cash book is divided into 1 column cash book, 2 column cash book, 3 column cash book, and petty cash book. In all of this, all these columns are put together in a single account. For instance, when we have 3 column cash book, we have column for cash, column for bank, and column for discount. When we have 2 column cash book, we have column for cash, column for bank. And when we have 1 column cash book, we have just a column for cash or column for bank, depending on the kind of transaction that is being carried out. If it is purely check, the 1 column you are going to have is going to take care of check. It's going to take care of bank. And then if it is cash throughout, it's going to take care of what? Cash. Now, whenever you take money from the office to go and deposit it into the bank, that money has reduced the cash you have, the level of cash you have at hand, and it has increased the money you have in a bank. So what is going to happen is that since the bank column and the cash book, they are into one, they are in the same account, it is going to be a contra entry. Why is it going to be a contra entry? Because as cash is reducing, bank is also increasing. So that single transaction affects 2 accounts. So whenever a single transaction affects 2 accounts, it is contra. Remember what we have said in control account, where the creditor become a debtor and the debtor become a creditor. So in cash book too, whenever a single transaction affects 2 accounts, it becomes contra automatically. So now looking at this question, this one is basically for cash book. So if you look at the options given here, from option A to option D, the only option that clearly defines contra entry here is option D, lodgement of cash in hand into the bank. So option D is the answer. At this point, bank is receiving and cash is given. So if you want to prepare it on the cash book, what you simply need to do on the debit side of the cash book, since bank is receiving, you are going to put that amount under the bank column, and under your particulars or your details or what we call description, you are going to put cash. And then in your folio column, you put C to indicate contra. Then on the credit side, since cash is the one given, you put that amount in cash and then put bank under your particulars or your details, indicating that it is actually bank that cash give the money to. That is how it is. Let's look at the second question. Second question says, when both debit and credit entries in respect of a transaction are made in the same ledger account, this is, I've already mentioned that this is called A contra entry, B, an accounting entry, C, a folio entry, D, a ledger entry. The answer is A contra entry. Let's look at 2 more. Number 3, in which ledger is a control account prepared? In which ledger is a control account prepared? Remember, this control account comprises of sales and purchase. So you cannot say it is sales. If you say it is sales, what about purchase? You cannot say it is purchase. If you say it's purchase, what about sales? It cannot be nominal ledger because nominal ledger takes care of income and expenses. So the answer here is C, general ledger. Let's take one more. An advantage of control account is, we're looking at, we've already listed the advantages of control account. We say A, locating figures, B, changing figures, C, locating errors, D, adding figures. Now, students will ask, but you have also said that it helps us to detect missing figures. You see, this is where proficiency in English is very, very important. You need to understand terminologies. At this point, student who does not understand the difference between missing figures and detecting missing figures and locating figures, student who does not understand the difference may think that the answer is A. The examiner wants to see how grounded and how rooted you are in the knowledge of control account. A is locating figures. It cannot be locating figures because what kind of figure are we locating? Remember, control account is only interested in what? Missing figure, not just figure, but missing figure. So it cannot be A. Changing figures, that's wrong. Then locating errors. We have explained that from the beginning, that control account helps us to locate figures, errors. And then the last one is adding figures. So the answer here is C. Let's take the last one, question 5. Which of the following is not the purpose of control account? One of them is not the reason why we prepare control account. Number 1, check on errors of addition, monitor cash book, locate errors, locate missing figures. You see now, number 1, check on errors of addition. Remember, we said it helps us to correct errors, to check errors. Number 2, they said monitor the cash book, locate errors and locate missing figures. Everything about control account is transaction on credit. So it has nothing to do with cash book. So the answer here is B. All right. So this is how far we can actually go with our exam guide. What we want to encourage is students should not hesitate to always visit our site and then solve as many questions as possible. If there are questions you seem not to understand, go back to the lesson so you'll be able to understand it. Now, to summarize all that we have said so far, we have said that control account is a memorandum account. It comprises of balances extracted from the subsidiary books, which is basically your debtors and your creditors. And we have said that some of the advantages of control account is that it helps us to detect missing figures, it helps us to locate errors, and it also reduces fraudulent practices. It also saves time. And looking at the division, we said that is divided into total debtors control account and total creditors control account. We say debtors account can also be called trade receivable or account receivable, while creditors account can also be called account payable or trade payable. And then we also look at the contra entry concept, and we said contra entry is a situation where your debtors also become your creditors and your creditors also become your debtors. So we encourage that you always go back to Examguide to find out how rooted and grounded you are on a particular topic.